Welcome guys. In this video, I'm going to be showing you how to trade V75 profitably. Now, this is just an introductory strategy that is based on a particular repetition that the market makes over and over again. Okay, so I'm going to make some assumptions right about now and those assumptions are fact that you understand some basic aspects of forex trading. You know about how to draw trend lines, you know about support and resistance. Those are foundational skills that you need to have as a forex trader. The same thing applies over here. Okay, so before I go through this particular strategy, let me just run through some basic things that you should know, okay, when it comes to how the market moves on volatility. Same thing also on your normal forex space. Okay, you must understand that the market moves in trends. Okay, V75 is a volatility market, very highly volatile, and there is based on trend movement. It is either the market is going up or the market is going down. Okay, so these are the market moves in trends. Okay, and what makes up a trend? You have the impulse move, and you have a correction or a pullback. Then you have another impulse move. Okay, then you have a correction or a pullback. These are the market moves, guys. The market will never go straight this way. Okay, it always moves in impulse. Okay, moves in pullback. Same thing if it's going on a downtrend. So this will not be the impulse move, right? This will not be the pullback or the correction. Okay, this will not be the impulse move. Okay, this is what we call trend. Okay, so what makes up a trend? Impulse, correction, impulse. Very easy, guys. Okay, so now that we have this out of the way, I think I can go ahead and show you exactly what the strategy is about. Now, you must understand that the market makes a lot of patterns. It forms some repetitive patterns. And in this video, I'll show you just 2 patterns and how to trade it. Okay, but let me just tell you what it forms. V75 forms 3 major patterns. You have the M pattern. Number 2, you have the W pattern. You have the heads and shoulder pattern. You have heads and shoulders pattern. Okay, it also forms the V pattern also. Okay, but in this introductory course, in this particular strategy, I'll be showing you how to trade just these 2 patterns, guys. Okay, how to trade it, how to master it, and of course how to be profitable trading these 2 patterns. Now, it is very easy and anybody can do it. Now, there are a lot of ways that some other traders will want you to trade this M and W pattern, but you might find out that even though the market makes these particular patterns, you might lose a lot of money. Okay, so before I go ahead, let me show you what the market makes. Okay, you can see, and these patterns are based on reversals. Okay, so let's say the market has been on an uptrend for a while. Before it forms a downtrend, it is going to form either a M pattern or heads and shoulder pattern. If the market is going down, before it goes back up, right, at this support level, it's going to form a W pattern before going back up. Okay, most of the time. So the goal of this video is to show you how to spot these patterns, and of course how to take advantage of these patterns and go with the flow. Okay, so this is, let me just show you some patterns that the market has been making so far. Okay, just to so this is what I'm talking about here. So this is an example here. You can see this is a downtrend. Okay, as you can see, impulse, correction, impulse, correction, impulse. Now something happened over here. Okay, you can see at this support, you can see this W pattern, W shape. Okay, you can see W before going back up. The same thing over here also. You see the head and shoulder pattern over here. The market forms either a W or M or heads and shoulder. Okay, so moving on, let me show you how to trade this particular pattern. Very, very simple. Let me bring out my trend tool. Okay, so you are looking for a trend up, right? Now in a trend, you have this particular pattern where you have the impulse move, you have the correction, you have the impulse, you have the correction, okay, you have the impulse. Now you are looking for a reversal. For an uptrend, you are looking for the M pattern. So you want something that looks like this. You have the impulse move, you have correction, so hit this trend line, bounce back this trend line, okay, then you should break your trend line. Then you want to wait for a retest to this neckline here. Okay, so let me highlight this. So these are the major points, guys. Okay, so this is the M, this is the, okay, these are the major zones. Okay, as you can see, this forms a M pattern. M, as you can see. Now, once the price breaks the trend line, you won't enter at the break of the trend line. You want your price to get to this neckline over here. This is your neckline. You want price to get to your neckline. Let me change this color to red. You want price to get to your neckline. You want price to break the neckline, and you want to enter at the retest, very close to your neckline. So once there's a retest, you enter at the retest. Same thing goes for a W pattern. So you are looking for a trend. The first thing you are looking for is a trend downwards. Okay, this is a trend. Okay, what makes up a trend? Impulse moves and what? Correction moves. Let me change this color. So something like this, impulse move. Cancel. Impulse move, then you have the correction, you have the impulse move, then you have the correction, you have the impulse move. Okay, you have the correction. Okay, I want this to bounce off at this trend line. Okay, it can be like this, then also be like this, then a retest before going back up. Okay, so these are your major points over here. You can see that's your W, and this is your neckline. Over here is your neckline. You want price to break your neckline. Always wait for price, for market to do these guys. Okay, once price breaks this neckline, you want a retest to happen. If there's no retest, you don't enter the trade. Okay, once price breaks your neckline, you want a retest to happen, because that's the structure of the market. The market moves in trends. So this will be your correction move before the market goes to its real move. Okay, so these two strategies, trading the M pattern and the W pattern, is what it can help you make a lot of money trading volatility. You can be a profitable volatility trader, guys. No jokes. Okay, so let me just label this for emphasis sake. So this is what? This is the W. This is the W pattern. All right, and this is what? This is the M pattern. It's as simple as that. So once you can master these two patterns, you'll be very, very profitable trading B75. Okay, so now let's get straight to business. Let me show you exactly how to trade this on your normal market representation. Okay, now, so depending on your account size, if you are trading volatility, if you have a very low account, you want to stick to trading the 5 minutes, the 1 minute, the 5 minutes, or the 15 minutes. If you have an account of about $100 or $200, you want to stick with 5 minutes or 15 minutes maximum. If you are going way higher than that, okay, you might find yourself in a lot of trouble when it comes to pullbacks and drawdowns. Okay, so 5 minute chart, 15 minute chart, the drawdowns, your accounts can handle it if you use the lowest lot size possible. Okay, so let me show you how this works, guys. So I'm going to erase all of this and just do 1 or 2 examples for you, and I'll show you why the market is going. Currently, you can see the market is on a downtrend currently. I'm going to show you why the market is going on a downtrend currently. Okay, so let me just do 2 examples. So I can see one here. The first thing you are looking for is to find a trend. Okay, trading this system, the first you're looking for is you want to find a trend. You are looking for a trend. Okay, so find a trend. Now let's find a trend right now. And we see that a trend is a what? A trend is a combination of an impulse move. You can see an impulse move. Then we can see a correction, right? You can see impulse. You can see a correction. So that is a trend. So this is a valid trend. Okay? This is a valid trend. So let me delete all of this right now, guys. Okay, just give me a second. Once you can grasp this particular concept, you can even apply this to trading your normal currency, your normal indices, your cryptocurrency, and you find that this is absolutely phenomenal, guys. Okay, and the best part is that you're getting this free of charge. Okay, it took me about 2 years to be able to master this particular strategy, and I'm teaching it for free. Okay, so this is a valid trend. So what will I do? Let me just draw my trend line. Okay, so I'll draw my trend line over here. So this is my trend line, guys. This is my trend line. Let me make this green. Okay, so this is my valid trend line for this particular trend. Okay, and what am I looking for? I'm looking for the formation of a W pattern. Okay, and at that formation, I'm looking for the break of this trend line. Once the trend line is broken, I'm waiting for a pullback towards the neckline. Okay, so as you can see here, there is a W formation at this support. So this is your support. Okay, this is your support over here. If you go way back, you should be able to see that this is a strong support level. Okay, as you can see, this is a strong support level. Okay, then something you must also understand is that VIX 75 respects technical analysis a lot. Once you understand support and resistance, supply and demand, you excel trading B75. Okay, so you want this to be at a strong support zone. So once you get to that support zone, you are waiting for the formation of a W or an M. Okay, so let me just give you another insider secret. I won't go deep into that, but you want to do your analysis. You want to find your, find a strong support zone on higher time frame. Then you look for formations like this on lesser time frame. So for example, let's say this support zone is on the 1 hour time frame. So I go one step back to 15 minutes and I look for formations of W or M on 15 minutes. Okay, so that is a little secret that I won't expand on. all of that will be taught on the premium course. Okay, but this is enough to get you started, guys. Okay, so this is the this is a W pattern for a buy, okay, at support. Okay, let me just draw this again for emphasis sake. This is, as you can see, this is W. Okay, very easy to see. And also you must train your eyes to catch all of this. Okay, so I'm going to delete this now. So this is my W. Now what I'm going to do is I'm going to draw my neckline. This is my neckline right here at the top of the week counts. Okay, this is my neckline. I want price to break my wick. Price must go past my wick. If it does not go past my wick, I don't consider it as a break. Okay, so you can see price went up. When it got to this point, you can see it stopped exactly at this highest point of the week. So I want price to break this particular zone, then I want price to retest. So this is my entry on this particular trade, on this red candle over here, on this red candle. Okay, so I enter my trade. My stop loss is usually over here. That's at the start of the what's it called, of the impulse move over here, or the most recent support, and that is over here. So I don't use a stop loss, but I use a mental stop loss, such that once price gets to this particular zone and price closes below this zone, okay, I exit the trade, because there are times that price might come back to this zone and hit this particular zone, but does not close below this zone. So this zone gets weaked and continues going back in the main direction. Okay, so until price gets to this particular stop loss level and closes below, that is when I know that I should be out of the trade. Okay, so I take my entry over here on this candle, at the close of this candle. Okay, and as you can see, I had drawdown of 264 pips drawdown, and as you can see, the potential for this trade was 1,459 pips. Okay, if you had a $100 account and you entered 0.005, you could have doubled your account just within 5 hours actually. Okay, now I tell people that when trading VIX, it is an open take profit. When your goal is reached, okay, you exit the market. Okay, depends on how much time you are willing to stay in the market. But if you are trading on a 15-minute time frame, okay, catching 200 pips to 300 pips is very, very easy. 200 to 300 pips is very, very easy to catch when it comes to trading on the 15 minutes. If you are trading on the 5 minutes, catching 150 to 200 pips is very, very easy. So it depends on your preference as the person. Are you fine with 150 pips? Are you fine with 200 pips? Okay, but your stop loss is very, very important. Know that, calculate your stop loss to be over here. Okay, when price closes below this particular zone, you exit the market. So you can choose to use a stop loss value or just wait for price to come here. When it closes below this zone, you exit the trade. Okay, that's what I recommend anyways, but you can start with setting your stop loss value. Okay, let's do another example. Okay, so find a trend. Okay, then second one is what? Find a trend. Okay, you're looking for find a support or resistance zone, okay, which we did. Then what? 3 is what? Find M or W pattern formation. Okay, formation. Then 4, wait for a pullback. or a retest, pullback or a retest. No retest, no entry. Okay. And 5, execute your trade. Execute trade. Okay, and let it ride. Okay, so those are the 5 steps to profiting with this. You might need to screenshot this so that you can go back to it and practice. Okay, so there's another example, guys. Please permit me to delete this. Okay, I think I'll leave. Let me just delete this so it won't get disturbing or confusing. Okay, I'll do this example. So I'm looking for a trend. Okay, why did the market go this way? Okay, let's see what happened over here. So on the 15-minute chart, still on the same chart, let me draw my trend on this particular trend. So I can see a valid trend. So this is my trend. Find a trend. Okay, so this is a trend. What do? I draw my trend line. Okay, you can see a trend line over here. Okay. Here. Okay, so these 2 points is where I'm drawing this trend line. Okay, so this is point 1. Okay, because I have 2 touches, that's a valid trend, right? Okay, point 1, point 2, then we have point 3 over here. So this is a valid trend. Okay, so what am I looking for? So this is a support, this is a resistance zone, as you can see over here. Resistance zone from the back here, and also this zone. This is a resistance zone. Okay, let me draw that so that we can follow the rules. This is a resistance zone, guys. Okay, as you can see what is happening from the back here, this zone, you can see that this is a psychological zone. Okay, market was acting up at that zone. Okay, so that means it is either price breaks the zone or keeps going back, and you can see there's something that pushed the market backwards. Okay, so now I'm looking for a M pattern formation, which I have over here. So I'm going to draw this. You can see, just to make you see it, this is M, as you can see, M pattern. So I have that pattern formed. I'll delete that. Okay, so what do? Let me draw my neckline. This is my neckline here. Okay, make this blue, purple, and make it thicker, right? So this is my neckline, and as you can see, this is the breakout over here. Once there's a breakout, I don't enter at the breakout, I enter at the retest. Okay, so this is the retest. No retest, no entry. So this is the retest, guys. This candle over here. Okay, so I enter for a sell on this candle, and as you can see, market move my way. Okay, 328 pips. Okay, before going in the opposite direction. Okay, and if you have chosen to even put your stop loss over here, it won't be taken out of the trade. As you can see, market still went that way. Okay, so this is an easy win. If you have just put your stake profit to be 300 pips, you will have entered the market and ended in profit. Okay, so let's say you missed this opportunity here. I can see another opportunity here. You look for another trend. Okay, first thing you look for is what? You find a trend. Okay, and I can see another trend that formed as a result of this this range over here. Okay, let me just delete this eclipse. So I can see another trend over here. So let me draw my trend line. This is another trend, guys. This is another trend. Okay, why is it a trend for me? I see this touch over here. Of course, this touch over here. As you can see, there's a reaction at this particular zone. something pushed the market up here. So this is a trend line, the value trend line, two touches. Okay, so what am I looking for next is to look for, okay, I've marked my resistance zone, so I know that there is a resistance at this point. Okay, so next thing I'm going to do is to look for M or W pattern formation. For a sell, I'm looking for the M pattern. Okay, so now there are times that the M pattern might not be as clear as you want it to be, like all of this, but there is something happening over here. There's something happening over here. So as you can see here, let me draw this. Okay, so something else that you can do actually is to use Heikin Ashi candles. If you are confused about M or W pattern, change the candlestick representation from your normal JCP to Heikin Ashi. And how can you do that? You come here and you change to Heikin Ashi candlestick. So that gives you a good representation of the market. Okay, so here's what I'm going to select as my own M. Okay, so I can see something like, you can see this. Okay, don't let me do it that way. I'm looking for an M. Blah, 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 blah. That's an M. Let me go back to my normal candlestick. That's what I'm used to. Sorry guys, give me a minute. Let me delete this. Okay, good. So we have marked our trend line. We have identified a resistance zone. Now we are looking for what? We are looking for an M formation at resistance. Okay, so one thing that you can do is to what? Find your M. So I can see an M formation over here. Over here, I see this, right? So at the break of, so that's an M. So I've identified an M pattern. Let me put this away, and this is my neckline. I'm going to draw my neckline so that I don't get confused. Okay, neckline, I told you that the wicks matter. So this is my neckline, guys, over here. So, and I'm waiting for the break of the trend line, right? So this M pattern here, there was a break of trend line over here, and I'm waiting for a retest. Okay, this candle, this is the break of the trend line. This candle is the break of the trend line, but I will not enter on this candle. Right, I'm going to enter on the retest that retested very close or touching the neckline. So this will be my entry on this particular bullish candle over here. So once I enter the trade over here, I can see that I had a drawdown of 107 pips. Then I had a move down 595 pips. I can enter another entry here. Okay, I can see that neckline is still valid. Okay, enter here. These are not 500 pips. The neckline was also touched at this place. I enter, and as you can see, the market keeps going down. Okay, so because of time, I cannot go into all of the examples in this particular chart. Okay, but once you go through it yourself, identify why the market is going down and why it is going up. At every point that the market is going up or down, there is either a M pattern that is forming at resistance or a W pattern forming at support or heads and shoulder or V. Okay, there is no reversal in B75 that is not really preceded by all of these pattern formations. Okay, there is a great deal of repetition when it comes to trading volatility index. If you can understand how to trade these patterns, I believe you'll be very, very successful trading this pattern, trading this particular index. So guys, I hope this has been very, very valuable for you. If you have any questions, shoot me and email, comment on this video, and I'll do well to answer your questions. Okay, so guys, have a phenomenal time. I believe you've gotten value. If you have gotten value, share this video, tell somebody about it, and I'll be giving you a lot more content. Cheers guys, bye.